ARK Invest's CEO Cathie Wood has said that Tesla stock will be worth up to $500 by 2026, even without Robotaxi. The Tesla bull had previously made price targets on Tesla stock, stating that these could be achieved if Tesla successfully produces its Robotaxi. But now Cathie Wood has grown even more bullish on Tesla, as she believes that the company's stock can go as high as $500 by 2026, based on EVs alone. Could this really happen for Tesla? Let's see how. Hey guys, welcome back to Tesla Tomorrow. Cathie Wood's investment firm ARK Invest recently bought millions worth of Tesla shares during the automaker's worst daily dip in more than 2 years. Wood's flagship ARK Innovation ETF purchased 145,000 shares of Tesla, worth $15.7 million, at $108.10 per share, while ARK's Autonomous Technology and Robotics ETF also nabbed a further 31,000 Tesla shares, worth $3.4 million. Wood continues to double down on Tesla shares as she sees the stock has a huge buying opportunity for Tesla investors. According to her, Tesla does not need autonomous ride-hail to be successful, as the EV opportunity alone is enormous. Why has Cathie Wood said this though? Let's find out in this video. But before we really do get into it, don't forget to like and subscribe and ring that notification bell to keep up to date on everything going on with Tesla. Cathie Wood had previously claimed that Tesla will do well with Robotaxi, as she made some high price targets for the company's stock. In April 2022, Wood disclosed that she expects Tesla's stock price to rise to $4,600 by 2026. She said that that's achievable if Tesla succeeds in developing and rolling out self-driving robotaxis. Similarly, the ARK Invest CEO adjusted her Tesla price to $1,533, following Tesla's 3-for-1 stock split. Setting a probability of 25%, Cathie Wood said that in a bear scenario, Tesla stock will hit $966 in 2026, and could go as high as $1,933 in a bull case scenario. However, Cathie Wood has now said that Tesla could reach significant milestones even without the Robotaxi. In a recent tweet by the Tesla bull, she cited another tweet from Sam Chorus, ARK Investment's Director of Research, Autonomous Technologies and Robotics, which cited that Tesla's margins, as well as its superior drivetrain efficiency and low battery costs, could make it one of the best positioned to weather any cyclical slowdowns for automobiles. He added that just like Tesla's done in the past, it can be the first to lower prices, which puts pressure on other automakers. Also, ARK Invest CFA Tasha Keeney also stated that removing autonomous driving and any form of ride-hail, which is believed is going to drive more than 60% of Tesla's value over the next 5 years, the firm's 2026 price target will become roughly $500 per share post-stock split based on EVs alone, which is more than 4 times what Tesla's share is currently going for. Following the prediction, Cathie Wood recently bought more Tesla shares on the day of its biggest plunge since September of 2020, reaffirming her conviction in the EV maker. Cathie Wood's company ARK Invest recently began buying more Tesla shares and stated it would invest in high-conviction names such as the automaker. Wood's recent purchase came during Tesla's 12.2% drop, its largest single-day decline since September of 2020, and the stock now is down nearly 75% since November 2021. According to reports, funds backed by ARK Invest bought more than 176,000 shares of Tesla in the first US trading session of this year. The purchases came just as Tesla stock plunged 12% after the company missed estimates for quarterly deliveries, despite offering hefty incentives. Wood's exchange-traded funds have acquired slightly more than 938,000 Tesla shares since the 3rd of October 2022, when it started its latest buying streak. ARK Invest is one of the largest investors in Tesla stock, and the EV maker is the number 1 position in the ARK Innovation ETF and the ARK Next Generation Internet ETF at 8.75% and 9.21% of assets, respectively. Together, the two funds own more than $880 million in Tesla shares. Cathie Wood's subsequent purchase of Tesla stock shows that the Tesla bull expects a lot more from the EV company, and there is no doubt Tesla will deliver, as the automaker has great potential for enormous sales in the coming years. The EV market is growing in several factors such as new regulations on safety and vehicle emissions, technological advances, and shifting customer expectations are effective catalysts for growth. However, much of the mainstream acceptance and excitement for electric cars can be attributed to Tesla, and its unique business model. Tesla took a unique approach to establishing itself in the EV industry, and it has dominated for a long time. Instead of trying to build a relatively affordable car that it can mass produce, Tesla took the opposite approach, focusing instead on creating a compelling car that's going to create demand for EVs. Tesla is big on innovation and bringing interesting products to life. Historically, companies that successfully take risks have been rewarded on the stock market, and Tesla has not been left out, at least in the past years. While legacy automakers dragged their feet with investments into electric vehicles, Tesla was willing to go all out on electric vehicles, making them attractive and practical. That's why most EV buyers don't just want an electric car, they want a Tesla. Musk has previously said that Tesla came close to bankruptcy while ramping up production of the Model 3, but it did survive and it became a smashing success. Tesla not only benefited from the high demand of its cars, but also from the profit margins and sales. Tesla has an incredible profit margin, higher than any other car company, including automakers like BYD, which sells the most passenger electric vehicles in the world. And while they lead by sales volumes, having for the first time in 2022 dethroned Tesla as the world's top-selling EV brand, Tesla makes far more profit per vehicle than its EV competitor in China. In the first 3 quarters of 2022, BYD sold 1,175,321 passenger EVs. These included both fully electrics and plug-in hybrid cars. On the other hand, Tesla sold 908,573 EVs over the same period, with BYD leading Tesla in delivery numbers by nearly 30%. However, on net profit per vehicle sold, Tesla leads by miles, reporting a net profit of $8.87 billion in the first 3 quarters, while BYD reported a net profit of $1.14 billion during the same period. Also, on a per-vehicle basis, Tesla made more than $9,761 in profit, over 8 times more than BYD, which made $1,190 in profit per car sold. ARK Invest and its CEO Cathie Wood believes that Tesla and its future performance is going to be a real thing to watch out for. According to the investment firm, innovation market capitalization will exceed $200 trillion by 2030. In addition, ARK Invest has identified 14 different interesting instances of transformative technologies which are now converging together, and therefore have reached a tipping point, and since Tesla's focused on innovation, it could do well in the coming years. The automaker is already reducing prices for its cars across markets. They recently slashed car prices in China for the second time in less than 3 months to boost sales amidst slowing demand in the world's largest car market. The car company cut prices for all versions of its China-made Model 3 and Model Y. However, according to Tesla's Vice President for External Relations in China, Grace Tao, Tesla's price cuts are backed by innumerable engineering innovations. She stated that Tesla is responding to the country's call with practical actions to promote economic development and release the potential of domestic demand. Likewise, Tesla's Cybertruck is drawing closer to production. Not long after an image of the Cybertruck body prototype leaked from a gigafactory in Texas, videos from the site now suggest that the all-electric pickup truck's 9,000-ton gigapress is being delivered to the facility, and with the recent news, it does seem like Tesla is indeed on track to start the Cybertruck production this year. In similar news, Tesla emerged as the best-selling car in the United Kingdom for the month of December. According to the December and full year data published by the Society of Motor Manufacturers and Traders, SMMT, the electric SUV was the most popular car in December, and the 3rd most popular car overall in 2022. Including when compared to cars with fossil fuel burning engines. It was a dominating performance, with a total of 10,664 Model Ys registered in the UK, with the Model 3 in second place with 5,704. While there are considerations about the rising inventory levels for some of Tesla's models, considering that not all Tesla EVs are qualified for the recent tax credit, Tesla is still able to cut down prices on some of its EVs to boost demand. In the same way, Tesla's intense focus on electric vehicles, as well as its strong brand, also allows the automaker to raise prices and pass on higher material costs to customers. Do you think Tesla can reach $500 per share in 2026? Let us know down below, and if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there!